Yo guys, Leggy here and welcome to a new video. Today we're going to be talking about our investment portfolio. Today is week 2. So I've been going more in depth about my portfolio throughout a week. So if you want to see those videos, I'll stick them here. But firstly, what has happened within the week within our portfolio? So our portfolio closed last week at £10,642.79. And basically, I put in the amount for us to actually get to the end of the month investing £5 a month in the S&P 500. If you guys don't know, that's what we have been doing. It's a big aim of ours to carry on investing just £5 a day, coffee cup investing. So this obviously means that we've invested £35 because there's 7 days in a week. 10 of these are just stuck in the pie because the market hasn't been open yet. But this means that our portfolio has closed at £10,825.12. So this is an increase of about £180 minus the £35 we've actually invested, which means that we're about £145 gain over just the gain of our stocks going up. So as I said, we have actually got some free cash in our account as well at the moment, just because it's waiting to be deployed, £5 a day. So when we look at our free cash, we have got £67.11. So this brings the total on our account, invested and free funds, to a grand total of £10,892.23. So if you guys don't know, basically, I explained this in more detail in this video here, but Trading212 offers 5.2% on uninvested cash in your ISA. So basically, Trading212 offers 5.2%. How do they do this? They actually invest in QMMFs. So this is where they gain their returns by investing in low risk things, but like government bonds. So from a Trading212 website, credit risk, if a QMF in which your cash is invested becomes insolvent, you may lose some of your cash. But they say they safeguard this risk by only investing in high quality QMMFs. But it's just interesting to know that, you need to know that there is risk to it. So from our 5.2%, as I said, we don't have much cash in just to tie us over to the rest of the month, but we have gained 7 pence. So this is basically just the just 1p a day for the 7 days of the week. We've also actually gained £2.07 in dividends. So I went through a video with all my dividends right here, but basically just for this week, Reality Income, which is a monthly dividend payer, it's a real estate investment trust. Same with Stag, they both pay on the 15th of every month. So Reality Income, we got £1.35, Stag, we got 54 pence, and then we also got Apple, 18p, nothing major for that one, but on the 16th of May nonetheless. So with regards, let's get into our first pie. So we've got into our blockchain, AI and big tech pie, which I really do like this space. You guys probably saw my videos back in the day, but I did a lot of cryptocurrency videos. So you guys are probably thinking, you did so many videos on crypto, why did you stop? And I just like to say that I actually never sold any of the crypto I had from that period where I was making loads of crypto videos. I completely held. I've got a lot of conviction in crypto still. I love what it does. Why did I really slow down on buying cryptocurrency? Basically, I was getting to a point where my risk tolerance wasn't at the level where my assets were. So basically, I was too far into crypto. The volatility on it every day, seeing the money go up and down, just wasn't for me. So, but I didn't want to reduce obviously the assets I had in it because I had conviction in them. I just wanted to make sure that I was building up this more traditional portfolio, so it was weighted way higher. So if crypto, went boom tomorrow, I wouldn't be as upset. But with that, let's have a look at our blockchain pie. So this one was in the negative last week. It's up £12.89, so 1.21%, which isn't a lot, I do know, but like it was at like about a -3% loss last week. So you got to take the mini wins here. So if we look at the holdings, you'll see some massive losses at the moment. It's actually held up by MicroStrategy and Coinbase. So these two stocks are very, very consistent with the movement of Bitcoin. And if you guys don't know, Bitcoin has actually done a bit of a mad one this week. So Bitcoin is up 10% on the week, up at $67,000. So if you guys aren't aware of the Bitcoin space, why has it risen so much in the past year? Well, firstly, we've had the Bitcoin halving, and this is basically when the amount of rewards for a newly mined Bitcoin, the reward given actually halves. So the idea is that this basically increases the scarcity of Bitcoin, meaning driving the price up. So also, there were actually some Bitcoin ETFs released earlier in this year, which meant that people can actually get exposure to just buying Bitcoin on the stock market, which is absolutely insane. So if we go to this post by Watcher Guru, it says that 937 financial firms disclosed Bitcoin ETF holdings in Q1 of 2024, so it just sees a growth in this space at the moment. So what are the benefits of holding MicroStrategy and Coinbase? And really, I would say there's not too many. Like, I would personally just hold Bitcoin, but obviously some people don't like the going in that untraditional world. So MicroStrategy and Coinbase can be a good way of getting exposure to that market without going and buying Bitcoin. So as you can see, the Bitcoin miners are doing really poorly. They're weighted very lowly in this anyway, but basically they could be down for some reasons, but you've also got to realize that Bitcoin miners, because they report, their price movements can lag Bitcoin. So we've got diversified growth, which is another pie, which is basically where we do one high conviction play, which I absolutely love, from each sector. So within this pie, it hasn't really changed the price movement of it. We're still in the green, but what has changed is that Alibaba has had a magnificent week. So it did drop a little bit after earnings, but it's up 10% on the week. So I brought it. I brought this stock just because I wanted exposure to China, and also basically it was at its all-time low. So this is always not a good way to good way to buy a stock because it could always drop way further after you've brought it, even if it is at all-time lows. But I just really do like Alibaba. And yeah, as I said, it was mostly to get a bit of exposure to China without going crazy. So the other one from this pie, which has gone absolutely mental this week, is BT Group. So they actually posted a 3.9% dividend rise on 16th of May, and the share price ended up jumping about 10% in early trading. And the CEO actually came out and said that BT's growth progress gives us confidence to provide new guidance for significantly increased short-term cash flow and sets out a path to more than double our normalized free cash flow over the next 5 years. Normalized free cash flow is basically the amount of cash generated after accounting for the cash reinvested. So our ETFs, I won't go into that much because we did a massive video on it, but they haven't really changed recently. And I doubt they will change that much over the next few months. I'm not planning to add to this in the near future, but it is next on my go-to list to add to. They've all done nicely because we managed to invest in them like last year. So financial stock, obviously Lloyd's dividend is coming up soon. That's going to be quite a nice one. All of these are around. So these ones are either plus 10% or minus 10%. SoFi Technologies is a very it is a company right at the start of what they're doing. So this one could gamble. So if I could easily go either way, it's one of those ones which, we could find in 2 years' times where it could be 30% up, 30% down. That is probably one of the riskiest plays in this pie. Obviously, it is noting that, every so often you get historical bank runs, or just look at the banking crisis a couple years back. Stuff like that can happen, and that can make financial stocks a bit risky, and I don't really like them. I just wanted exposure to this sector, and so I thought I'd get this exposure, but will I add to this that much? Probably not. But Hargreaves Lansdown, as you can see, they're so far down from their all-time high as well. They've really had an increase in their stock price for last month. So when Hargreaves Lansdown actually released their quarterly report, they reported a net client growth of 34,000 a quarter. So this is compared to 23,000 in the year prior. They also showed a share dealing volumes averaged 794,000, up from 770,000 a year before, and their total revenue was 6.2% higher year on year at 199.7 million, up from 188.1 million. So next to your energy, it hasn't really changed for a bit, but I didn't really cover it in our last portfolio update, so I will touch on it. Basically, we're up 30% on this at the moment. This whole industrial pie has actually been quite a success from investing in it. Why do I go into it? Well, there's a really convincing post which I found which had arguments for why Caterpillar and also Eaton and Deere and Co were all quite undervalued at the time, and as you can see, they've all performed really well. But I just picked up some other stocks in the same sector to flesh out the pie, and yeah, as you can see, the performance on these pies have been pretty good. So I did a video on the long-term pie yesterday. Not much has changed, but there is one key change to this pie. Basically, someone corrected me and said that wouldn't it be better to invest in 3i Group rather than 3i Infrastructure? So we've actually taken 3i Infrastructure out. I will sell that on Monday, and we'll reinvest the funds back into this 3i Group. I 100% agree with what they said. That was a bit of a boo-boo on my behalf, but that's fine. At least we didn't have a big position. But the rest of these are performing decently. Mag 7, basically all of these have been performing really well at the moment. I say this in every video, but the Mag 7 has basically accounted for 30% of market capitalization in the S&P 500. As you can see, Tesla, our point, considering how bad a year they've had, our entry point is actually nearly in the green. So it would be nice for the entirety of this pie to turn into the green soon. So REITs, as I said, this is a long-term play. This pie won't really do anything until rates are cut. When that will happen, I am unsure, not a mind reader. Loads of people are suggesting maybe the latter of this year we could see some talk about it or it even happening, but yeah, like I wouldn't say when, it's just I want to be prepared for when it does. So obviously these pay very frequent dividends, and what I'm doing with dividends is it's going straight into S&P 500 to build that up to the 10k mark we want to build. So talking of the S&P 500, this one is just getting £5 a day. Like I said, we are up around about 7.5% on this, and slowly but surely we're still very far off that 10k goal we want, but we're getting there. Yeah, so guys, that is the update to our portfolio. I hope you guys did enjoy the video. Please leave a like and subscribe. Thank you for the support on recent videos, and I'll see you guys next time. Peace.